Hey, Tim Sykes here. I hope you're having a good weekend. Very good video lesson for you. I want you to watch this until the very end, and I want you to leave the words, it's okay to be lucky, okay? Because luck, happens every now and then. So say it's okay to be lucky if you understand the gist of this video, only if you watch the entire video. I don't want you just watching a little bit and misunderstanding, because this is going to be a very detailed video lesson. Before I get to that, I want to mention that you have a few days left to take advantage of this Profitly birthday sale, 30, 40, 50, 60% off newsletters and DVDs. And I'm glad that because the Stephen Dux interview that I did, where he turned 27,000 into 900,000 plus in a little over a year, is kind of going viral. And he said his two favorite DVDs were Penny Stocking Framework and Trading Tickers. So a lot of you guys are watching those, and I can see the usage numbers, which is kind of good. But also understand that Stephen Dux didn't just watch those two DVDs, okay? That's the start of his education. He also watched every single one of my webinars, every single one of Tim Grittani's 50-plus archived webinars, Mark Crook's archive webinars, and Michael Good's archive webinars. This is part of the beauty of the challenge. You don't just get 2 to 4 live webinars every single week. You get archive webinars. And Stephen Dux was actually going to give a live trading webinar on the 26th. We had to actually change that up. It's going to be Tim Bowen giving a live trading webinar. We have a few different traders, and the schedule always changes based on our own personal schedules. It's Stephen Dux's finals week right now. He's still in school. Yes, he's made over 900,000 plus while being a double major too. So you challenge students, get excited for Tim Bowen's live trading webinar on Wednesday. Also, just a few more days left on the Stocks to Trade birthday sale. There's going to be no extensions, guys. Okay, I know a lot of you guys like to wait until the last second. You have until May 1st. I've warned you tons of times in video lessons and blog posts galore. If you want to save with long-term savings on Stocks to Trade or on Profitly, you have until May 1st. There will be no extensions. I know in the past I've given extensions. I'm too tired. I'm too busy. I'm too cranky these days. So no extensions. Get that through your heads. If you want to save, save. If you don't, don't. It's fine. Sorry to be a dick, but it's crazy how many people procrastinate until the last second. Right now, I want to talk about this guy, Billy. I posted his story quickly on Friday. Here's a little refresher.
What's up? Tim Sykes here. Happy Friday. And I am so proud of this student, Billy. He has worked so hard, and I want to share his story. He just showed me a little video. Check this out.
I just had this. Today is my 1-year anniversary. Hanging out at the embassy. This is my best day ever in trading. Like, hands down, I can't even think straight. So I'm doing this video because I'm ready to post to Twitter, and I know it's going to be a lot of hating and faking and baking. I don't care about all that. Tim Sykes, I just want to tell you thank you, and I'm going to leave it at that. We're live. I'm actually live with the group, and the group has no idea what's getting ready to happen right now. I hope you all can see that. Wow, that's all I can say. So, post on Twitter, man.
Freaking awesome job. This guy's worked his butt off, and now he's making roughly 90.
So we made roughly 94,000 on Friday. Everyone's been commenting, going crazy. And the reason why I want you to leave a comment under this video with the words, it's okay to be lucky, it's okay to get lucky, because he got a little lucky. And it's not the end of the world. Luck happens to everybody. He was on the right side of the trade. But if you, study hard and you put yourself in the right situations, you'll find that you'll get lucky more often than you'll get unlucky. And I'll explain that in a second. But props to Billy. He's been waking up every morning at like 4:30 in the morning, just studying charts. And he was shorting ADPT, which, basically changed into ADPTQ. They announced their bankruptcy, and that's where he got a little lucky. This is the chart of ADPTQ. So he was shorting this multi-day bounce off the lows of 111 up to 3, and he was shorting it in here, in the 140s, and thinking that it could come back down to the low ones. And again, he got a little lucky. He was short overnight, and they announced bankruptcy, and then they got halted and the stock dropped big time. He actually covered a little too soon. as did I. It actually really brought me back to a similar play where, you know, I thought I was going to make 100,000. This was a little while back, a few years ago, when I was trading big, shorting CNTO, which was a blatant pump. And I was shorting it on the first red day, thinking that, hey, this pump could drop, you know, 10, 20, 30%. And overnight, the SEC halted the pump and dump. And I was short big, and I was really excited, and I thought that I was going to make 100,000 plus. After fees, I made nearly 70,000 because I was actually borrowing the shares to short from my high net worth broker, which, you know, charges a per day fee. And so that adds up, but I still made, you know, roughly 40%, and I covered way too soon. You know, with these kinds of plays, it's tough to time because you don't know if, you know, the big drop is just going to be, you know, a quick drop, or if it's going to bounce, or if it's going to keep going, you know. But shorting pump and dumps works pretty damn well because, you know, especially on the first down day, because they're either going to collapse or, you know, every now and then they get halted by the SEC. Shorting this kind of a bad sushi play, if you've seen my trader checklist guide, which you should because it's 100% free, if you go to traderchecklist.com, you would see that this is a classic bad sushi example where the stock drops, you know, 80, 90% in a few days, no bounce whatsoever. And I compare it to bad sushi. You know, sometimes sushi is like 50% off at the supermarket because it's old. And, you know, if you're really poor and you want to save money and you're like, I'll get the 50% off sushi. And sometimes it's fine. But sometimes, you know, it's very dangerous to buy bad sushi. And the same thing happens with these stocks. When these stocks are 60, 70, 80, 90% off, sure, they can bounce. You know, this did squeeze for one day. I mean, it nearly tripled, or more than tripled in one day. But again, this was bad sushi, and the company eventually filed for bankruptcy. So I want to be more short biased on these kinds of plays because, you know, even though lately in this hot market, these plays have been coming back, the bounces don't usually last. And so this is what Billy was doing. He was shorting right in here. He's going to do a video recap too, but he also actually sent me his executions because I know some people don't believe it. Some people are like, oh, it doesn't happen. Listen, if you show every single, you know, execution, every single trade, that's cool. Obviously, it's awesome to verify everything on Profitly, but I get it. Some people have certain reasons why they can't do that. And I used to take a very hard stance. I was like, you have to verify on Profitly, you have to be on Profitly, you have to share every trade in real time, or else you're a fake. Lately, you know, I see that, frankly, I mean, I've been teaching now for 10 years, and I see people all over the world, and some people just can't or don't want to be fully transparent. So I'm not going to say that Billy is some like master trader and that this is an amazing trade. It's a good trade. He got a little lucky, but I am proud that he showed all of his executions. You can see here, this is through Interactive Brokers. So he actually didn't have to pay any high net worth broker fees. If you guys are interested in my high net worth broker, please only email admin@timothysykes.com if you have over $30,000. They require it, okay? This is why I don't say their name, because it's not for everybody, and they get too many people with like $2,000, $3,000, $4,000, $5,000 being like, hey, make an exception for me. No, their minimum is $30,000. So if you want an intro, email admin@timothysykes.com. But on this one, you know, Interactive Brokers had nearly 1 million shares to short. Billy shorted pretty big, but he's trading with a sizable account, and you can see all his executions, roughly 10,000 shares short at an average of 1.373, and then another 10,000 shares short at 1.373, and then roughly 96,000 shares short at 144. So overall, 116,000 shares short at 140-ish. And you can see all his little executions, scrolling down, scrolling down. And then here, you know, ADPT gets turned into ADPTQ. The Q gets added when a company goes bankrupt. So he actually covered a little too soon, as it turned out. You know, he covered 116,000 shares at an average of 65 cents. You know, he got some at 42, some at 68, some at 68. And long story short, he made $90,000, which is a lot of money, which is awesome, you know. And if you actually look at what a lot of the biggest trades, no different than like my CNTO trade, are, you're shorting these penny stocks that can collapse, and you're shorting big. It's very, very rare for me to find anybody who buys these penny stocks big because they can collapse so quickly. Almost every single, big high 5 or low 6-figure trade, or even, I know there's a few 7-figure trades out there. Almost all of them have occurred on the short side of these plays because you know the ending. That's kind of the beauty with these penny stocks. You know how the game ends. It's not like guessing like, oh, will Facebook make it? Will Google beat Yahoo? Like, you're not guessing, industries going up or down. You're not like trying to predict the Game of Thrones, like which family is going to win. With penny stocks, you almost always know, especially with pump and dumps, and especially with bad sushi stocks, with charts like this, that they are going to drop in the end. Now, that's not to say that they can't spike in the meantime. I mean, look at this. On one day, ADPT, everyone thought that it was coming back, and it actually lasted for 3 days. So don't think that every single penny stock has to just go down perfectly without a fight. But at the same time, you kind of know how they end up. CNTO, I think, doesn't even trade. I mean, I've traded 1,000+ pump and dumps in my life. Not one of them has ever lasted. So you go with the odds to make big money on the short side. But understand that, if you're going to short with my high net worth broker and you're shorting, they have better borrows, but they have a per day fee. So I was shorting, what was it? I can't even think. I blocked this out. Oh my God. I have to look this up. Oh, I can't believe I didn't even think of it. NADL. I was shorting NADL because I thought that it got a little over ahead of it, extended on Friday. And I was shorting it, in the 260s and 270s. And it turned out that I was right, but, it squeezed in the middle of the day. And I got squeezed. I protected myself because I'm just scared of shorting stocks. So even if you know that these stocks are going to drop eventually, I was squeezed out on this little bounce. It doesn't look like much, but in the heat of the moment, especially when I'm traveling overseas and trying to catch sleep whenever I can, I was like, well, I got the big crack and it just didn't crack anymore, so I'm out. Later, the crack came right in here at around 3 p.m. Eastern, and it dropped very nicely. That was around 4 a.m. Japan time. So I missed it. But again, shorting this kind of run up was on the right side. That said, I was dip buying it the other day in the 180s. So there's multiple angles to learn, and you want to try your best to be on the right side. Again, it's not an exact science, but when you have plays like ADPTQ, this is how it opened, by the way. Will it work on a 2-day chart? Let's see. This will be interesting. No, because it was halted the day before. So here, this is the bounce from basically 110 up to 150 that Billy was shorting, and he was shorting pretty big, and he got a little lucky. Again, if you're understanding the gist of this video, leave a comment underneath that says it's okay to get a little lucky. I'm gonna straight up say I got a little lucky with this CNTO short. Before the SEC halted it, it was actually trading a little pre-market. It was going up, and I was thinking that I was going to have to actually cut losses quickly that morning. And then the SEC halted it before the market opened, and it was basically, a given that I was going to make money. But I still covered too soon, and Billy still covered too soon. And we both got a little lucky. But luck can be on your side if you're on the right side. Like if I'm, let's say dip buying a penny stock pump and dump and it gets halted, that's not me being unlucky. That's me being, an idiot and frankly, not on the right side of things. Because if I dip buy a pump and dump, I'm dip buying very quickly. I very rarely, you will ever see me hold any pump and dump long overnight because there is risk of getting halted because it's a pump and dump, and you can get investigated. The SEC can shut them down, or you won't see me very, very rarely holding a bad sushi chart overnight because whether you get bankruptcy or some really bad news, this stock, like ADPTQ, has a history of gapping down and not bouncing. So you have to look at the past. You have to look at what kind of chart it is, what kind of stock it is, and again, learn from what the biggest penny stock traders are doing and how they're making their biggest profits, and that is shorting big. I make fun of shorts in this market because a lot of them, I think, short too aggressively, and they short too early. But at the same time, when you look at the biggest success stories, almost all of them are short biased in a big way. So I don't mind the quick dip buys. I don't mind the quick buys, especially for those of you with smaller accounts. There's multiple forces at work here. You have short-term and long-term that you're thinking about. Like, what are the odds that you're actually going to be short the very day that they announce bankruptcy? The odds are not very good at that. Or, if you're shorting a pump and dump, what are the odds that the SEC is going to halt it that day? That's very tough / impossible to try to time. And if you're dip buying, again, if you're dip buying intraday, any of these companies, the odds are very low that any really negative news is going to happen intraday. If it does happen, it happens usually, after the market close. So you can reduce your risk if you want to just be long biased. But aside from just when big news can come out in short-term versus long-term positions, you have to think of yourselves with small and big positions. Billy started with just a few $1,000s. He never would have had this trade in the beginning of his career when he had just a few $1,000s. And you see me now trading with a small account. I'm primarily going long for quick dip buys, quick breakouts, stuff like that. On my bigger accounts, you see me shorting. So those of you with small accounts, I really don't think that you should be shorting big, especially in this speculative market, because even crap companies can spike a lot, but also you just don't have the capital. You need to take a big ass position to make a big gain, and you don't have the capital to do that. And if you do take a big position, and let's say you use leverage, I know there are brokers out there that use leverage. I don't use leverage. Stephen Dux doesn't use leverage. Mark Crook doesn't use leverage. Michael Good doesn't use leverage. I don't know really anybody successful who uses leverage, so get that out of your minds. But if you do use leverage and you're shorting these plays, and you're like, well, Tim, you say that all these stocks have big down days, so, I got to go big. You risk a lot too, because again, you cannot time when bankruptcy happens. You cannot time or predict when an SEC halt happens. It's a little bit of luck. Going back to the whole gist of this video, it's okay to be lucky. So I want you thinking about this stuff when you make your trades. When you're in a trade intraday and you're like, should I hold this overnight? And let's say you're long one of these bad sushi charts heading into overnight and you're like, wow, should I hold this overnight? I'm not sure. I don't want to waste a day trade. I know a lot of you guys hold stocks overnight because you're afraid to waste a day trade, and then you set yourself up for a risky situation. If you're long a pump and dump overnight, you can't time when the SEC is going to halt it, but you can reduce your risk and not be there. If you see me dip buying a lot of these pumps like, what was it the other day? ZENO, right? I did not want to hold this one overnight, not because I thought that, it was going to be a totally terrible company, but I just didn't want to risk an SEC halt because this is a pump looking chart. Okay? When you have this classic kind of a chart, you don't, especially on the backside, after the big crash, you don't want to be long because there's either going to be a gap down, a morning panic, the promoters are going to sell out, the SEC is going to halt it, some negative news is going to happen. You don't want to risk it. So while I might try and dip buy this, like I did several times, and one of the times I nailed it from, I was dip buying it here on the green day around 1, and it actually went all the way up to 150. I was selling in the 120s. I locked in my 20%, 25%. It went up 50% on the day. So you might see me dip buying it, but very rarely will you see me get aggressive holding overnight. I think that's probably, sorry, I have a hair in my mouth. I think that's probably even a better gist of this lesson. It's okay to be lucky, but also understand when, you're risking too much going overnight. If you're buying a pump and dump, it's risky, okay? And if you're holding it overnight, it's even riskier. What were some pumps that actually got halted lately? EMMD. This one, look at this big gap down, okay? This is what happens when the SEC halts it. This stock was trading in the 4s, 3s, and 2s, and then the SEC halted it. Now it's 20 cents. BLTO. Oh, it's still halted. All right, but it also had its first red day. So these are classic pumps. What was the other one? Was it IMMG? There's a few of them. Look at this. It's trading at $1.25 after the halt, reopens at 7 cents. So you don't want to be long these stocks when they're halted overnight. And it's good if you're shorting it. So there's a few different things at play here. Shorting in this market right now is very scary. Let's be honest. But at the same time, if you're shorting these blatant pumps, the odds are better that they're going to crash. Also, if you're shorting, after a first red day, I wouldn't just short these randomly. But if you're shorting these towards the latter stages of their run up, there's a good chance or a better chance that they'll either be halted or they'll crash. And if you're long a stock like ADPTQ, you just have to be careful because you see what happens here and it's freaking ugly. What if you were long right here, in the 6s, and then they had some bad news and it gaps down, you lose 50% of your money. So it's all fun and games to say, hey, I'm Tim, I get it, I'm willing to cut my losses quickly. But if the stock gets halted or if the stock crashes, and if there's bad overnight news, you can't cut your losses quickly. So congrats to Billy on shorting and getting a little lucky. We're going back and forth. He was like, I was shorting at 140. All I wanted was 120. He would have been very happy to make 20 cents a share. And he covered, in the 60s because, he had a massive gain, nearly $100,000 gain. I think this is his biggest gain ever. So it is possible to win big, but again, he got a little lucky, and you have to call that out. You can't say that this is skill. You can't say that I know this chart and they're going to claim bankruptcy. That's bullshit. No one in the world knew that this company was going to go bankrupt. And if they did, then they had inside information, and that's not a good thing either. But if you are shorting these bad sushi kind of charts, what was another one? OCRX. I haven't even checked in on this one lately. Let's see. Oh, this one, had the bad sushi and it's actually held up. So good. Here's a good lesson for you too, so that you can understand that this is not an exact science, okay? This is a bad sushi play. It's spiked off the lows and it's held so far. Maybe this one goes bankrupt too. There's no one right magic formula. Every single trade you're trying to judge the best you can. But if you are shorting a bad sushi play overnight, you have better odds than going long overnight, especially, after it starts dipping. If you're shorting a pump and dump on the first red day, you have better odds than going long. And all you can try and do is put yourself in these good odds situations again and again and again. And sometimes you're going to be wrong because odds, it's not like you short a pump and dump on its first red day and it's always going to crash. No, but the odds are roughly 80 to 90% that pump and dumps crash, after the first red day. So then it's a question of finding shares to short. And that's a whole nother video lesson of trying to, risk a little pain to ensure that you get the borrow on the shorts, because when it's a perfect short, there might not be any shares to short. That's where shorting gets even more interesting. But on these plays, if you're going long intraday, it's less risky than going long overnight. You have to just understand, and you have to learn to understand where are the danger zones. A play like ADPTQ is great. I'm typing it wrong. I'm all over the place in this video lesson. I'm sorry for that. But a play like this on the first green day, okay, try and buy it. Try and see how far it can go. But when it starts fading, you know, don't be caught long. And congrats to Billy, and congrats to a lot of other people I know who got a little lucky and they shorted this. Remember, if this video lesson makes any sense whatsoever, please leave a comment underneath that says it's okay to get a little lucky. That's one of the main points of this video. Sorry, it's not my best, but I'm out of it, and it's kind of tough to teach in exact science. Thank you.